Hello students. In last video of auditing we have seen the meaning of audit, and along with that we have also seen the definitions of auditing. So in this video we start with the objectives of auditing. Before that, to sum up with the definitions of auditing, we can conclude that auditing is in-depth analysis or verification of books of accounts, and the auditor has to report to management regarding the balance sheet and profit and loss account, that whether they are properly drawn up or not, and whether they show true and fair view of business concern or not. These two are the basic objectives of auditing. So we can classify objectives of auditing as main or primary objects, then next secondary objects, and miscellaneous objects. Now in this slide we can see the comparison, or we can see the total all of the three kinds of objectives. That is, first, main objectives. The main objective of auditing is to verify or verification of truthfulness of accounts and verification of completion of accounts. And another main objective of auditing is to ensure strict adherence to rules in maintaining accounts. Now the secondary objectives include searching for errors and frauds. As we have seen that the main objective is to verify truthfulness and to see that whether the books of accounts are completely drawn up and they show true and fair view of business or not. This is the main main objective of the auditing. And along with that, the second main objective is whether the accounts are drawn up according to the rules and regulations of the accounts. These two are main objectives of auditing, and secondary objectives are searching for errors or frauds and controlling those errors, or spot out those errors or frauds for the management. The secondary objective is also an important one from the point of view that it is going to show you the errors in the books of accounts along with the frauds, if there are any frauds in the in recording any transactions, if there are any frauds in like regarding goods or cash. So this kind of frauds can be detected by the or can be detected by the auditor, and this is the secondary objective of auditing. And in miscellaneous kind of auditing objectives is the keeping moral control on the staff. Means if somebody is knowing that if you are going to do this kind of work, or you are writing accounts, and somebody is going to check those books, then the person will sincerely write that books of accounts, and that's why the person will do his work very sincerely. Satisfying tax authorities means it is a process that to satisfy tax consultants or tax authorities, you have to uh, get your accounts audited. And lastly, to help in formulating future business policies. Once your accounts get audited, then it becomes reliable, or it becomes truthful. That's why one can formulate or easily frame their future policies regarding their businesses. Now we will see the objectives of auditing. The verification of accounts and reporting to management are the important factors to factors um, for promoting efficiency and accuracy in accounting function of the business. The accurate information about the financial condition of business can make a firm basis for future plans and policies of the business. Now the first main objectives: verifying and scrutinizing. Scrutiny means to analyze or careful examination. Verifying and scrutinizing the accounting records of the business, and reporting about the true truthfulness or falsity of the financial statements are the two basic objectives of auditing. The auditor has to satisfy himself about the truthfulness of accounts and the financial statements, like whether they are completely drawn up or not, and whether they are following all the provisions of existing rules and regulations of the accounts. These two are the basic things that auditor has to be check about the drawing of or writing of the accounts. The auditor has to report to the management that the accounts are true, complete, and they are maintained as per rules or not. Now the secondary objectives. It is very essential for the auditor to um, ensure that the books of accounts are free from any kind of errors, frauds, or misappropriations. It is responsibility of auditor to locate such errors and get them corrected. Now the next is miscellaneous objectives. The first is moral impact on employees. Means When the employees are aware that the records prepared by them are going to be examined or checked by the expert person, they tend to be more careful. They have to be more careful about the writing of the accounts. They have moral pressure that in case of any serious mistakes, they can be punished by the management, or if they are involved in any kind of fraud regarding cash or goods, then there will be fear of severe punishment among the employees of the business. Thus, the regular audit of accounts and records help to keep watch, as well as mm, it will also show it will also as a moral check on the employees of the client of the business. Now the next is second, to follow rules and regulations. To follow the regulations and statutory provisions of the of law and books of accounts. This is the main or basic thing for the accountant. The auditor has an obligation to ensure that the books of accounts are properly maintained as per the rules and provisions of law. The clerks, accountants, or managers, and all the other staff or employees who are concerned with the accounting of business have to be careful in this respect. Then the next is to satisfy the tax authorities. So this is not the legal compulsion for the sole trader or for partnership concerns, but it is beneficial for those concerns or those businesses also, that they should get their accounts audited, because the because duly audited accounts are considered as more reliable by the income tax or sales tax or other tax authorities. So it is suggested for sole trader or partnership concerns also to get their accounts audited. And the lastly, to obtain definite and reliable information for determining the future policies. The future managerial decisions are very much depend upon the information compiled through financial statements and records. The basis of accounting is uh, the bi- the basis of accounting is the business information. Auditing assist or help in ensuring the reliability of accounts and in the formation of future policies, because due to auditing, the management will get to know about the errors and frauds if there are any, and then they will correct it and show the fair and true picture of the business transactions. So These are the objectives of auditing, and in the next video we'll see the types of auditing. Thank you.